Hello, everyone. This is the Sourceseeker Hour, the 180th episode, and we are going to talk about causes, funding, and insurance. Originally, we were going to talk about just insurance, but there's a whole lot of aspects to having an organization or working with an organization. And funding is one of them. Insurance, of course, is another one. Working with organizations, we all do that in some kind of way. If you have even if you have a bank, you have to work and work with the bank and different things. Insurance, of course, we all have to have insurance, and we're going to talk about a lot of different aspects of that. Again, I'm Baruti Carl Alexander, and this is my our 180th episode of the Sourceseeker Hour. Current events we talk about. It is getting close to Christmas and the New Year, and I wanted to highlight some of the causes that we have, and then talk about insurance and different things that come with that. I have a nonprofit organization myself. I work with Black men's mental health. It's in the beginning stages. I've had an organization for a long time, but that didn't work as well. So I've redeveloped my organization. And a lot of the parts that I'm having to deal with, of course, are putting a board together, uh, coming up with funding, and you have to have insurance. So all of those factors come into play. I would like to introduce my guest, Ms. Cierra. Would you like to introduce yourself?
Yes, thank you so much for having me on tonight. I'm excited to be here with you all and to discuss the topics. My name is Sierra Evans. I am really big on having people be educated and understanding all of the different topics and aspects of our quality of life. And I'm excited to engage in this conversation.
Well, thank you very much. Thank you very much. Brother Jeff, can you introduce yourself? My longtime guest and friend who basically taught me how to use Zoom. Now, I hope I've taken it to another level, but you were the first introduction, brother. Uh, I was piddling around and you helped me, and I hope I've made you proud. I can't hear you, brother. All right. Well, check on it and just chime in when you are available. I'm not sure what's going on either. But when we talking about insurance, we talking about causes. Miss Sierra, what causes do you like? Do you work with, or would you like to work with?
You said what causes or what policies? What did you say?
Causes, things that, yeah.
Okay. Well, I know you mentioned previously about having a nonprofit, so that insurance would be business insurance, but for life, whole term, insurance is definitely essential for everyone. I really know that in our culture specifically, we have a lot of fish fries and car washes. So I think this topic couldn't be more important today than any other time because having life insurance is really about making sure that you're properly protected and your income is protected in the event of obviously what we're all going to face, which is death. So,
Let me interject for a second.
absolutely.
I believe Brother Jeff is having a problem. He can't hear us, or we can't hear him. And previously he was. I got you. You can hear me. I got you.
Can
Um,
you hear me now?
I can hear you now. Go ahead.
Okay, that is the weirdest thing ever. See, this is why you hop on early to try to get all the bugs and everything. I'm gonna put this on me somehow, and I have no idea what happened. Anyway, this is Jeff Hill. I am the CEO and founder of Hill Financial Group. Hill Financial Group is a fractional family office. So we look at things like risk mitigation, wealth management, legal services, business advisory, and tax planning. So it's kind of one-stop shop. When people come to me, we do everything on a holistic and proactive basis. And I'm happy to be here. As Brody said, I am a longtime participant of the Source Seeker Hour, and I love coming here and imparting wisdom. I'm not a gatekeeper, as you guys know. When I show up with the intent to serve and to educate. So, Miss Sierra is right on the nail on the head. We do a lot of education in terms of what this stuff really means and cutting through all the social media noise and customize everything for your experience and what's unique to you guys. So, all right, I'll go ahead and remove myself back from the mic, and I'll let you take it back over for wherever you were, Rudy.
I just want to talk about real quick that there's so many different aspects of, just being out here in the world and being active and participating. I'm also a member of Operation Hope. I'm a beginning member. If you don't know what Operation Hope is, that's John Hope Bryant, who's a black millionaire who started with his, I believe his mother started with buying a house, and he took it to a whole nother level. Now he works with people, and I see what he has done. I see what Brother Jeff has done. I see what you are doing. There's so many aspects of progress that we can take a part of. And so a lot of what I want to do with causes, funding, and insurance is make people aware of different opportunities that they can participate in. What are some of the things that you participate in, Brother Jeff, as far as helping people be aware?
Okay, so oftentimes it's not uncommon for me to hop on social media and go live. Maybe it was a unique client circumstance, or maybe in one of my learning journeys, if you will, I've uncovered things that I feel like the masses need to know. Unfortunately, when you're talking to the masses, it's not tailored. It's good to get the information out there, but sometimes what really, really helps the individual is sitting down with the person. That's what I meant when I said cutting through the social media noise. And again, I'm somebody that uses social media, right? And so sometimes our attention span is getting smaller and smaller. So you got 7 to 15 seconds, if that, to try to capture somebody's attention to educate them. And unfortunately, this is not a sexy industry, right? It's just not. Like, people spend more time planning their vacations than they do their retirement, right? And their life. That is a huge issue when you can sit down and you can go to Expedia and pull up all these browsers and you're excited, you're checking this and this and this. You spend 10 to 12 hours trying to plan out a vacation. But sometimes when we say, hey, we need to have an annual review, which might only take an hour, it's like, ooh, where can I find an hour in my schedule? And then sometimes we wonder why we're not hitting some of our financial goals. Is because we're not actually planning to do so. I'm a huge fan of multiple sources of income, and I'm a huge fan of understanding how the wealthy use certain tools like cash value life insurance, or they use the tax code to reduce the amount they're paying. And if you reduce the amount that you're paying to the government, that means you have more money to put elsewhere, whether that's reducing debt or powering up your wealth. So I mean, there's a lot of little things, and I know we'll get into it as we go along, that we're here to really help facilitate and get some of these questions answered.
Uh, Very much so. And a lot of people, as you said, will spend time on other things, but the tedious part of taxes and budgeting and so forth. And as I tell my son all the time, you got to go step by step. You just can't go to the front of the line. And a lot of young people have a problem with that. And it's a process. Miss Sierra, can you share some of the things that you would say people need to be more or make themselves more aware of?
Yeah, absolutely. I think I alluded to this piece in the beginning. Education. It could not be more important. I have this saying, the 3 Ps. You need to plan well so you can prepare well so you can perform with excellence. That's what we need to do. You have to plan, prepare so you can perform. The real performance will come after your death, when your family has it easy, essentially, to navigate all of your dealings. So one of the biggest things I would say, though, when it comes to life insurance or income protection, or whichever you like to phrase it, knowing and understanding the policy, reading through the policy. I hear more times than I would like to people saying, yeah, I have a policy. I'm good. I got it at work. They have no idea once that job ends, because naturally, especially people in my generation, you're not going to be there for 50 years and get that gold watch. It's not going to happen. So you're going to not have life insurance at some point, and you need to make sure that you're covered outside of work, because that, and knowing those different limitations. If you go and you're an avid bungee jumper, or you like to jump out of the, not yet. If you like to jump out of planes, that might not be covered if you perish during that. So just knowing those different levels of limitations and waiting periods, knowing what that is and reading through your policy is so essential. Having someone that is licensed and someone who truly understands how to navigate those policies and break it down to you is essential.
There are many different kinds of insurance, and it gets confusing. It gets confusing a lot of times. I mean, of course, there's life insurance, there's term insurance, there's term life insurance, I think. Can you speak on that a little bit, Brother Jeff, of the different types of insurance, and if somebody's goal is to build income or build wealth? Can you talk to the type of insurance that would be best for that?
So that's going to be situational, right? I mean, I can give you blanket statements, but when you really look at somebody's financial picture, that's going to determine what type of policy or policies they need to have in place. Because at the end of the day, your budget is going to determine if it's a term policy.
Can I interject a personal part of this? I talked to you, and I was looking at, like term life and all of this different kind of life. But you told me it'd be better to go get a Roth IRA, given my situation. Can you kind of share? I don't know if you remember that, but can you kind of share what situation that might be one of the best ways to do it?
Okay, so let me bridge the gap on some things, right? Okay. And so we're talking about two different dynamics, people. Okay. Number one, you're talking about something that is pure investment, which is going to be a Roth IRA. Okay. Now you have two basic types of IRAs, traditional, Roth. Traditional is taxed just like your 401k. Okay. You get the tax deduction. It's tax deferred, meaning you're not getting a 1099 every single year. And then on the back end of a traditional, you pay your taxes. Now, the problem is you pay whatever the tax rates are at the time you take the money out. That's an unknown number. When you're dealing with a Roth, it's after tax, meaning I got my paycheck already. Uncle Sam and Aunt Iris has already done their thing, got the money in my hand. Now I go invest it. Okay. After tax, it also grows tax deferred, no 1099, but on the back end, after you turn 59 and a half, you don't have any extra penalties and you can take the money out tax free. Now, the benefit to that is if taxes double, 2 times 0 is still 0. Okay. Now, if you're talking about building wealth in a traditional sense, yes, IRA is going to be building for wealth. And at some point, maybe you can take income from it via the 4% rule. You can annuitize it by moving the money over to an annuity or something like that. But Bree, I want you to understand there's a difference when you're talking about life insurance, okay? Because life insurance is not one size fit all. One of the least expensive ways to purchase a policy is to get a term policy. Okay, the word term meaning you're buying it for a specific amount of time, 5, 10, 20, up to maybe 30, 35 years. Okay, now that means that premium is the exact same amount for 35 years. So if you got $1 million policy and you're paying $1,000 a year, great. It's going to be $1,000 a year for 30 years. On that 31st year, it's not going to be so friendly to you. Okay.
Oh man.
Now your premiums go up because you're a lot older, right? Now, again, I don't want to take too much time because I know Cierra has a lot of knowledge and weighing in on this. But on the other side, you have something called a universal life. Then you have a whole life. Then you have an index universal life. And then you have a variable universal life. As we go along, we can probably dive into the complexities of some of those, but we'll keep it very user-friendly, if you will. But I'm a fan of having multiple policies for different reasons. People love term insurance because it's cheap. You can buy a lot of term insurance for pennies on the dollar. When you get into the complexity of using various types of cash value life insurance, this is where customizations are really understanding why you might want to have that is going to come into play. So, Baruti, a lot of people do something called buy term and invest the difference. Okay, if you don't have a lot of money, this might be the best way for you to try to start some wealth building. Because term insurance, you bought a big block of term insurance for pennies on the dollar, and you're investing the rest. Maybe you're using a Roth IRA as well. If you die while you're in that term band, let's say you got a 20-year term and you die 17 years in, you're going to have the money in your Roth is going to pass tax free, and that life insurance death benefit is also going to pass tax free. Okay. And so I'll pause there and I'll let Cierra jump in because, of course, you guys know I can go all day on this, but I definitely love to hear her take on this as well, and then we can get into some of the more complex parts of insurance.
So, Ms. Sierra, what do you say would be the best insurance for a young person like my daughter, who's 24 years old? I believe 24. I got to always count. I get in trouble all the time about their age. She's 24. She works in Southwest. Would you say is the best insurance for her? And then for somebody older, in your opinion?
You know, a lot of times I really agree with Jeffries that it kind of depends on situations. It really, I think a lot of times what's missing is people assessing their current health status, for one. What is your current health status? Because you're going to have to do different tests and give blood, or depending on what your coverage levels are. So it really depends on, like you mentioned before, like, what are you going to do with them? Are you going to invest? What do you want to do with your life? But I would say personally, with me and a lot of my friends, we did term, and then the invest the difference part was obviously something that was more beneficial because everyone was so young and we can just work to it, add that extra income into investments or different things like that. And obviously compounding interest is something that's helpful when you start as young as someone who's 24. So I would say investments like are huge, but also with younger people, you need to have taxable income. You need to have consistent income as well, because those are some of the things they ask you in those applications. Hey, who is your employer? Those are some of the things you really need to have to maximize on some of those investments or policies or whatever. So I think that it's important for us to understand our current health status so you can know what type of money you may need to put out, or if you're even going to be qualified enough to get the coverage you want, knowing your needs so you know how much coverage is appropriate for what you're trying to do. So sometimes those are the things that I think us younger people are under 40 or whatever need to assess. So I would say.
Let me ask this also. I mean, you have a person that they hear all this stuff, it gets cloudy to them. Who should they try to talk to? Of course, Jeff talked to you, but who are some of the other maybe entities or businesses? Should I go talk to Fidelity? Should I go talk to Morgan Stanley? Who should I talk to? Who do you talk to, Cierra?
I would say sometimes you got to pay to play, and so it depends on how much money you have. So if you got $250,000 sitting somewhere, that's going to give you access to talk to a certain type of people. I would say speak to someone that you feel comfortable with, someone that is competent, someone that is licensed, someone that has practiced for a bit, and they can articulate exactly what it is that you need and walk you through that journey of what your needs are truly. So I think that's the biggest thing, because there's a lot of different agents, but like listening to Mr. Hill, you can tell he's experienced. This is what he does. This is not something he's doing to make extra income, because you will feel the difference in the experience when you know someone like Mr. Hill's coming online and like, hey, this is what I do. So go with what makes you feel comfortable, because this is a decision that your family will be banking on for you to make it right. So I would say that.
And it can be devastating to not have insurance.
Oh,
You know, of
absolutely.
course, everybody knows a car situation. What can happen if you don't have car insurance? You know, you can get in legal trouble, you can get in total financial trouble, and also with a house. There's many people that say, hey, the hurricane did this, and then it flooded, but in their policy, they don't have flood insurance. And
Mhm.
so that totally messed them up. So it's so many different things going toward that. And in an organization, it's just a standard, and you must have some type of good insurance to make sure you are fortified. Um, uh, Jeff, talk about a little bit more about the value of having the right kind of insurance and how you could use it as maybe credit or different things or collateral in that
Okay.
context.
Perfect. So what Bruce is describing is typically using cash value life insurance. Okay. And so earlier when I mentioned cash value life insurance, I talked about whole life, I talked about universal life, index universal life, and variable universal life. Any one of those are considered cash value life insurance. Here's where the difference comes in. Okay. Not all policies are created equal. Not all designs are created equal. If you talk to 100 different advisors, you're probably going to have 100 different designs. Okay. One of the things that I have done, even before I ever got into the industry, I learned about a concept called infinite banking. When you use infinite banking, essentially it's built on a whole life policy. Ideally, you're trying to keep the cost of your insurance low and dump a lot of additional cash to the policy to build up the cash value. And typically, when you do this, if you have a pretty decently designed infinite banking policy, somewhere around year three, four, five-ish, you start to see the cash value growing by more than the premium. Here's how you know if you have an infinite banking policy. Do you have access to the cash value within the first 30 to 45 days? If that answer is yes, you probably have some variation of a design of an infinite banking policy. And so as you start to build up that, if you ever go look at a loan application, they ask you about your assets. They ask you, what do you have in collectibles? What do you have in your bank account, in your investments? And another asset class on there is cash value life insurance. The reason is it's extremely liquid. Okay. And typically you can access up to around 90% of the cash value inside of an infinite banking policy, if you will. If you're using one of the other types of policies, it might be a longer delay unless you use a different type of rider.
So,
Now,
where are
not to
some of
get
the
over,
places you can go to set up and work on this infinite banking model? Well,
okay.
give me an example of where you can go to do that, or just any bank you can set that up.
No, so it's a concept, right? And so it's not actually going to a bank, it's using a life insurance policy. Traditionally, it's done with whole life insurance, but I've seen it and I've also designed infinite banking policies using something called indexed universal life. Okay. And so not all advisors understand how to design these policies. And truth be told, to design them, you lower the commission that you make by designing this particular type. This is why for some people it's really unpopular because again, I would have to like kind of draw it out to show you the numbers so
So
you really
let me
understand what I
ask
mean.
this. So I'm willing to do $50 a month, $100 a month. Can I, will that go toward developing an infinite banking model policy? Or
So
do you have to do a big down payment?
no, no, no. You could do quote unquote a down payment. It doesn't necessarily have to be big, but like using a budget of $100 a month, ideally, Brody, I would not recommend an infinite banking policy for you, right? Because there's not enough money on a monthly basis to secure the design of the policy and by funding it. And so ideally, I would not say that's for you, right? Now, even
So
on
if
a
somebody
child.
was going to
Now,
spend $1,000 a month, would that be better?
well, absolutely. Just like anything that you're trying to get to grow, the more you put into it, the better it's going to be, especially in the context of insurance and investments. The earlier you fund, you give your money a longer time to compound. Okay.
Yeah.
And so you heard Sierra talk about, compounded interest, right? Inside of the cash value life insurance policy, remember, this is built on contract law, not tax law. And the government typically can't make any ruling on an existing contract. This is one of the value propositions of getting one of these things, especially early and younger, because you got a better cost of insurance, you got longer time for the cash value to grow, plus all the other living benefits. So there's a ton of features and benefits that you can use over and above just the banking. I know people who maybe they don't think they can qualify for traditional long-term care insurance, but they can use a life insurance policy with the linked benefits to it as kind of like a standby long-term care type policy. It really depends on the uniqueness of that person. And that's why I said there's so many ways to design them. It's better to sit down and figure out what somebody's trying to accomplish and then put together. Now you have people who understand how to build infinite banking policies, and then you also have people who are what's called IBC practitioners, infinite banking practitioners, right?
I've
And
seen
so
that IBC. Yeah, I've seen that.
yeah, and so ideally, that just means somebody got a little extra training on how to design particular policies. Okay. I know people, myself included, that have been designing them since I first got into the industry, but I've never gone through the coursework. Well, I've gone through the coursework, but I didn't pay the annual fee to put that stamp on my business card or my website. But do I know how to build them? Absolutely. Do I own infinite banking? Absolutely. Do I show people my policy? Absolutely. Because I show them what I designed, why I designed it, and how it worked on my own self. So then they see, oh, this is how this thing really works. Now it makes sense to them, or maybe it doesn't. And if it doesn't, then maybe that's not the right tool that we need to be using. But we're not just saying everybody needs to go out and get an infinite banking policy. You need to understand what it does and how it works. There's a ton of research out there that already verifies and solidifies the value of using the particular strategy. You just need to have an agent that understands how it works and that can design it for you, and then you go from there. But it can be a very good part of a portfolio.
I understand now, and it's always an interesting subject. And I see, like certain banks, the IBC Bank and so forth, so on, all that different thing. But it's still something that I got to get more knowledge of, and be able to understand it better. One thing I want to
So,
ask
so
though, there's so much state of flux in the economy. I don't, first, do you agree with that? And then, what are the opportunities and challenges? You got tariffs going on. You got of course, the housing market is always out there. I don't know what is the prime rate. Is it a good time for people to buy property, or is it a bad time? What is the state of the possible economic opportunities?
okay, so if you want to take advantage of any, and I mean any type of opportunities, one thing you're going to need is capital. Okay, just plain and simple, you're going to need access to money. This is one of the reasons why I do like infinite banking, because of the liquidity, use, and control you have when you design a policy. And so I use my index universal life for more of my longer term growth. And I like my infinite banking policy for my shorter term swings. I want that thing liquid. So if the market crashes, or I need to go and make a play for crypto or put it into a business opportunity or whatever, I got access to money. And it's growing better and giving me more value than just sitting in a bank. So economically, it's always ways to make money, right? But one of the things you have to also know how to do, especially during recessions, is to learn how to pivot. For example, when the pandemic happened, most people had their business model, they were doing seminars, but what happens if you can't go get 100 people or 300 people into a hotel room anymore? That's how you buttered your bread, so to speak. Well, you pivot and learn how to use online. You learn how to use Zoom. You learn how to attract a bigger audience, right? You learn how to pivot in those moments. And so when you think about stuff that's happening economically, when it comes to real estate, it depends on what you're trying to do with your real estate, Baruti. You got fix and flip, You got the buy and hold or the BRRRR method. You want to do that, right? You want to rehab it and rent it out. Then you have Airbnb, which is short-term rentals. You got wholesaling. And so depends on what you're trying to do in real estate, depends on how you need to be pivoting. Right now, if somebody wants to tap into real estate and they don't have a lot of capital, then you need to be using a lot of your time. Learn how to do wholesaling. Wholesaling is where you go get a house under contract and you go market that contract. You don't market the house because you're not a realtor, you're not licensed to go sell that house like that unless you own it. But if you are marketing a contract, I might say, hey, listen, I got this house. Let me finish this because this is going to help you and your audience. You go find the house, you put it on the contract, and you bought it lower than what they're asking, right? Maybe 70% loan to value. And all of a sudden, you go market this thing to a real estate investment club. Somebody in there might say, hey, I got somebody that needs that exact house. You might charge ten to $15,000. That's the markup on it. So all of a sudden, you got a house on the contract, maybe with $100 earnest money. You go shop this thing and sell it within 2 weeks, sell the contract within 2 weeks. You just made $5, 10, $15,000. Now you go rinse and repeat. Now, eventually, as you build up this capital, maybe you buy your first property to buy and hold so you can have some consistent money coming in. I am a huge fan of multiple sources of income for a reason. When things get rocky, you need something to fall back on, whether that's a source of income that's already working or a pivot to something else that can bring in additional income. Okay, so I know you're going to ask a question, Bruce. I'll let you kind of jump in and ask the question.
I want to, Sister Sierra, are you there? Are you available? Okay.
Yes.
Okay. I want to ask this. Let's say somebody has had a couple of bad breaks and they've had some credit challenges because of these bad breaks. People get divorced, they have problems all the time. So they've had some credit things that, went to the bad, and it went to where they're not paying on it, and it went to the worst situation. Uh, should they go back and try to rectify that, or just leave it alone and move on? Yeah, that's my question. What do you all believe about? We know how important credit can be, and I want both of y'all to talk about that. Sister Sierra, yourself first.
Yeah,
Talk about credit.
absolutely. I think that's a great point to add to the discussion because hopefully, if the policy is still in a space where you can just pay the premium to get it back activated, that would be great because as we know what happened during COVID, if you had a good policy, it was a certain price before COVID. So if you had the opportunity to say, hey, I haven't paid, but I still have the opportunity to make a payment and keep that policy, that would have been much more advantageous than letting it go, letting it lapse completely. And now you have to start over because if that happened after COVID, you're looking
If
at
you
a
said
complete amount.
policy, are we talking about credit cards? Or are we talking about
Oh,
any?
you're talking about credit cards. Yeah, I'm sorry. I was
I'm
talking
talking
about.
about credit, period.
Oh,
Yeah.
okay. So, I would say this when it comes to just keeping anything active. When it comes, so I was speaking in regards to a policy with life insurance still. So maybe I need you to give that question to Mr. Hill, and then I'll tap back in after he responds.
All right, go ahead, Jeff.
Okay, so the credit game is major out there, right? So one of the things that you guys have to understand is I don't care how bad your credit is, it can be fixed over time because there's legal statutes out there in terms of how long things can remain on your credit report. There is so many ways for you to challenge the stuff that's on the credit report because sometimes things are added on there illegally, right? Because there's a certain letter to the law that needs to be followed, like the Fair Credit Reporting Act. Okay, credit bureaus have to abide by the Fair Credit Reporting Act. So what typically happens is a lot of times they're just haphazardly throwing stuff on there, and sometimes it's machine done, and there nobody's actually physically doing it. It's just running it through a machine, and so that stuff hits your credit report. So Bruce, you're talking about the worst case scenario. Worst case scenario is if you got sued and you didn't show up in court and you got a judgment against you. Okay, that's the worst case scenario. Something just going to collections. Sometimes your original creditor has already sold it, so you can't go to them and say, "Hey, Wells Fargo, I know I messed up. Can I pay you guys?" Wells Fargo, they're gonna look at you and say, "Well, Rudy, we don't have that account anymore. We sold that thing off." Okay, and all of a sudden you get a letter from XYZ credit agency saying, "Hey, we're a debt collector. We have this debt with your name on it. You owe us X amount of dollars." Well, kind of, right? So what debt buyers do, they go and they buy these big buckets of debt from these companies, right? And so they might buy anything between 5,000 and 12,000, and they're going to send you these letters, make these phone calls, maybe threaten you, which is illegal, to get you to go ahead and boom, pay them, right? So they might have spent, let's say, I don't know, $10,000 on a big block of debt. And it might be 1,000 different people in there with these debt ranges. So they spent that amount of money, and the ROI on that, if they collect on all of that, is going to be pretty significant. Now we know not everybody's going to collect, not everybody's going to pay. Somebody might settle, but ideally they're trying to come after you for the money that you legally owed somebody, even though it wasn't necessarily them. When they bought it, it became their possession. But this is where sometimes using the letters to your advantage, a lot of your advantage, you can get some of that stuff like forgiven or forgotten.
I got one
But
big
again,
question on that though.
go ahead.
So what is the value of going back and trying to correct that old account that you owe $3,000 on, as opposed to just saying, I'm gonna let that go and I'm gonna just concentrate on the ones that I have active?
Okay, so that's twofold, right? Depending on the type of debt it was and the status that it's in, is it in collections? Is it charged off? Is it, sold off to a buyer? All that stuff makes a world of a difference. So sometimes just cleaning up your credit profile does not fix the issue. That just means it's not reported on your credit profile. Doesn't mean you don't still owe the debt. That doesn't mean somebody still can't come after you. It just no longer is being reported on your credit profile. Or maybe you got it blocked or something like that by turning off LexisNexis, and some of these other third-party bureaus, right? And so, Brody, the value of maybe focusing on everything going forward and what's current is you're getting that under wraps. If that thing is in collections, it's not too much you can do other than maybe trying to set up a payment plan or seeing if they'll do a settlement offer, right? They might say, listen, on this $7,000 debt, how much can you pay? You might say, man, I can give you 2,000. Okay, great, we'll take 2,000. Now that five thousand
And
dollar
will
difference,
will that help your credit if you do that?
well, no. I mean, that is not necessarily
What's the
going to
purpose
help
in
your
doing
credit
it then?
because some people like to, honor their commitment of what they borrowed and
Oh,
uphold their
okay.
good name. That's why.
Yeah, but
I mean,
I mean,
again, I'm
I
not here to
got you.
judge different strokes for different folks.
Yeah, yeah, different strokes for different folks, but technically, and it looks like if it's not beneficial in that way, uh, I'm not sure what the real possibility is that it would be good for you. Sierra, did you hear that conversation about the credit card and paying old debt as opposed to moving forward?
Yeah, absolutely. And I'm grateful for Mr. Hill giving such a dynamic explanation of those points because that is much more his area of expertise and discussion. Because it is a lot that comes with that credit and the debt. And I'll just continue to take my notes on this piece of discussion.
All right, sounds good. All right. A lot of people deal with that particular area and so forth. And it's important to know that, hey, if you just go back and pay that, it may not help your credit at all, as opposed to, just continue to move forward. And certain things, as he mentioned, are illegal. They can't threaten you. That's correct, right? They're not supposed
Right,
to
right,
threaten you.
right, right. They're not supposed to do it. They legally need to say this is so and so or so and so's firm. This is the debt collection agency we're calling to collect on the debt. But they're not supposed to threaten you at all, right? And
Yeah.
so, I've had these phone calls. Matter of fact, last year, About every 5 to 7 years, I get a call about this debt that happened associated with me from a very long time ago, right? There was some fraud on one of my accounts. It was some bad checks, right? And so I filed a police report, got with the bank. They knew what was going on, investigation, all that stuff happened, right? So they closed the account naturally, right? And so that thing went away, right? It was fraud on the account. I had all the paperwork, everything filed. US Bank was like, okay, we get it, we understand, cool, we close the account down. And so every 5 to 7 years, I'll get a call from this, and somebody's still trying to collect on them. I'm like, guys, listen. First of all, statute of limitations has been up, okay? And when you can produce the verification and validation letter that I actually own that debt or I had that debt at some point, maybe we can have a conversation. They cannot produce that. Number one, it's been way too long. Nobody's gonna ever collect on that. But you still get those phone calls, right?
Yeah. And I'm sure a lot of people, I've had a car that was 2 cars ago, and this company is still calling me about that car that I owned 2 cars ago. It's been
Mhm.
10 years. And so they're
Mhm.
asking me about that. And I say, hey, I don't even, that was so long ago. I don't know why you even talking about that. But I'm sure everybody has been through situations like that. Credit is a
Mhm.
very tricky kind of thing, and it's something very important. It's important to causes, funding,
Mhm.
and insurance all across the board. It is important to understand how credit works and how it can help you in what you are trying to do. Uh, we are toward the end of our program. I want to talk about what kind of causes or different activities that we want to take part in or we are taking part in. I know, Jeff, you have Jeff Hill Financial Group, right?
Yeah, Help Financial Group
Okay. Uh, tell us about the vision and outlook.
of Help Financial Group.
Yes,
Okay,
yes.
awesome. So, as a fractional family office, ideally our goal is to continue to find the right CPA partnerships to help them bring more value to their clients. One of the things that I've seen definitely since our
Let
go
me
ahead.
ask it from this perspective, though.
Okay.
So, or do you just run it yourself? Do you have partners? Do you have helpers? Who do you have in your organization as far as who you go to for funding, who you go to for different lawyer type of insurances, that kind of thing?
Okay. Okay. So when you look at it, there's five kind of disciplines that we cover: risk mitigation, wealth management, legal services, business advisory, and tax planning. We have 75 plus professionals across these different categories. And so when I say it's kind of one-stop shop, when somebody comes, they don't have to go figure out who they need to be talking to. We need to diagnose their situation. We bring the specialist to the table and actually hold their hand through that process to make sure they get the education they need and the implementation of the strategy. One of the things, and I remember somebody asked me, like, what's the problem with most people's planning? I was like, they don't have a plan, right? Products that we've been talking about earlier, term insurance and investments, products have a certain set of attributes that solve a certain set of problems. But the products in and of themselves is not the actual plan. It's like the analogy I love to use is Broody. Like, let's say you go, have you ever played golf before, Broody?
Putt golf.
Okay. All right. So let's say putt golf. Okay. And let's say Tiger Woods came to you and said, "Hey, Broody, listen, man, I see you the best putt golfer out there, brother. Listen, I love it. I can't play in a tournament this year. You can play at my spot. There's a lot of money you can win. But Broody, you can only take my clubs or you can take my swing. Which one of those would you rather have, Broody?
In that case, I would take the swing
Why the swing?
because his swing is going to win me the game. I can get to clubs from anywhere, but
Absolutely.
his swing is going to win me the game. So that's what I would take.
Absolutely. So I use this to illustrate a lot of times advisors are primarily focusing on the clubs. We all have access to some of the same clubs out there, right? But as an advisor, I want to help you tailor your swing. I want to show you how all of these different products work together holistically to benefit you and your family and create generational wealth. And so Hill Financial Group, our outlook is that we want to be the premier organization for business owners and high net worth individuals that come through when they have complex needs, right? Not that we can't help anybody that's not necessarily a business owner or not necessarily high net worth, but when you really want to maximize the value of what we can bring to the table, you want to be able to utilize these services. And what I always tell people, even if you do have an existing team, we can come in and we can actually work alongside of your existing team and fill in the gaps of maybe what they don't do. And then sometimes we've had to replace some people's team because they weren't getting the value that they thought. They paid a professional to provide a service and they weren't getting that, right? And so I always say this, I don't want to necessarily undo any good relationship or planning that somebody else has done. Okay, I always want to respect the other professionals' work. Now, I'm going to give you some guidance on things that I might do a little bit different. But again, remember, if you talk to 100 different advisors, you're gonna have 100 different plans. Doesn't necessarily mean my way is the best. It's a different way based on all of the coursework and the designations that I've done and the way I look at this puzzle piece.
You said 5 areas
Mhm.
that your company concentrates on. Share that again. Share how many years you've been in business, as well as where your financial acumen, your financial. Did you go to school for financial
Okay.
understanding?
Just
So
a little bit of
share
background.
share
Okay,
those
yeah,
things.
perfect. So the five categories: risk mitigation, wealth management, legal services, business advisory, and tax planning. Okay. And so I've been in business now for over 16 years. I started my career with New York Life, a Fortune 100 company. New York Life was the oldest and largest mutual life insurance company in the United States and one of the largest in the world. And around 2015, I went independent. And because one of the main reasons is I love multiple sources of income. So sometimes when you're dealing with a big firm like that, they want to govern how you can earn income outside of them. I didn't care for those shackles. That's why I left corporate America. I wanted to be able to delve into many things because I'm a multi-passionate entrepreneur. Because I am that, I used to do my own taxes. I used to learn and read the tax code and figure out how to move stuff around. I was building multiple sources of income, network marketing, real estate, financial services, and that started to get it too complex. I don't want to deal with it all. So I said, all right, who, not how, who can I put in place that can do this stuff for me? And I started building out a team. Well, I started realizing some of my best clients wanted that same type of white glove service, if you will. They wanted somebody to hold their hand through this process to make sure they got the stuff done. Thus, I went from just focusing on wealth accumulation to more fractional family office, more holistic planning. Okay. I think that was also where I learned the core foundational parts of how to build this business through New York Life. And then from there, as you see, I have a couple of designations behind my name. I ended up getting my MBA. So I put my business consulting hat sometimes on when I'm dealing with clients. But I also have a designation called RICP, which stands for Retirement Income Certified Professional. Okay, so it's going a very deep dive into the complexities of retirement income, the taxation, the wealth, and how to leave it and all that. I'm currently now getting my Series 65 to get back into the investment world again. And I'm getting a designation called Tax Planning Certified Professional because it uniquely designs with what I'm looking to bring to the marketplace.
You got a whole lot of things there in the area of finance, money, and so forth. MBA, a Master's of Business Administration. What'd you say? Retirement? What was that one?
Retirement Income Certified Professional. And then the next one
And
is
then you are working
TPCP.
on.
TPCP, Tax Planning Certified Professional, to just understand the different nuances of tax planning. And the Series 65 is Investment Advisor Representative. That's essentially where, we might do assets under management. We're charging a fee for proactive advice.
A whole lot. Everybody out there in the world, if you want to know about financing, you got your brother right there, Jeff Hill, Jeff Hill Financial Group. He can guide you through it. I've been working with him for a long time, and I vouch for him. And he got understanding. He'll tell you what's going on. Miss Sierra, uh, I see you have Sierra Communications. So are you in the communications area or more so in another area or education? What area are you in?
Essentially both. Day by day, everything I do is education. So whether it's communications or articulating communication systems or educating adults on the political arena, both are educational fields. So we do a lot of work when it comes to creating, developing, and managing or sustaining communication systems. So how do you build out that infrastructure? How do you market yourself to be the best logical choice as opposed to your competitors? How do you brand yourself consistently and clearly so people know who you are and you're making a statement with your brand moving forward? So that's what we do a lot of, and we help entrepreneurs, churches, small businesses, and right now very political heavy. So I
Yes.
have a degree in political science. I got a master's in criminal justice so that we can focus a little bit more on those judicial candidates as well as the law enforcement, because culturally the Black and brown community is heavily involved in the justice system. So that's what our focus is. Again, education heavy, communication strong. So
And those two combined, I would say, are very critical. Education and communication together to be educated and then to be able to present that information. If you can do that, you can progress forward, and more of our young people and others need to make themselves aware and available to do that. I want to, we are toward the end of our show. I'm going to give everybody the last highlight. I wanted to, Miss Donna, are you there?
Yes, I'm here.
Okay, would you like to share what you wanted to share about funding?
Yeah, first I want to say I'm sorry. I'm kind of one. I was trying to call because I was having an issue trying to get in, but sorry about that. But yeah, I just wanted to talk about education, which is the young lady just mentioned, how, of course, how communication, how important that is. So I wanted to communicate on the fact that there's so much going on now with the education savings accounts, which they've changed the name so many times. It started from private voucher for private schools, then it became the ESA Education Savings Account, and then it became now the Texas Education's Freedoms accounts.
And
And
who are who are the ones that are doing this? I have TRS. Where does that come from? What you're talking about?
okay, what we're talking about now is that Governor Abbott has been fighting in legislature about this for several years about these education savings accounts. And like I said, originally the plan was for private school parents of private school students, K through 12 education, to be able to receive funds, public school funds, dollars that would typically go to public schools, that those dollars will now allow parents to decide, hey, I want to pay for private school, and my instead of going to public schools, it would go to the private school of their choice. When that became such a hot topic, that's when they started converting it and trying to change it to, oh, these are just education savings accounts for anybody who wants to, parents giving parents the choice, school choice, to decide where they want their children to go to school. And so instead of saying each child per capita right now in education in Texas, each child can receive is receiving like at least $18,000 per child per capita, right? But however, if a child has additional disabilities or other risk factors, then of course that dollar amount is going to increase depending on every risk factor that a child may have for different programs and grants, right? So right now, Texas is saying, "Hey, this voucher has been passed. This savings account has been passed. Legislation has passed this, and now parents will have the option to be able to take these dollars and decide where those dollars are going to go. They're
Um,
giving."
I,
Uh-huh.
I just want to say that that has been a push in the education community for quite a while. They've been trying to take those dollars that go to the public school system and be able to have them available to use how they want to. So, and that's just not Texas. That's kind of a national push. Now, Governor Abbott has pushed it in his past, and in my opinion, as an educator for 32 years, um, we should see this coming. We should adapt to it, and we should develop our home school or community school system. That's my opinion, but it should take not just all of a sudden. It should be over time, and those parents who have the political acumen and as well as the community resources, they can put eight parents, put their kids in a school, hire a teacher, and because they can more so develop their own curriculum, not as attached to the state. So that is my opinion on that. I want to come back to you, Jeff. You have an opinion on that?
So I'm not familiar with what's going on in Texas, but when it comes to the education savings account, you have a few different things, right? If you go back and look at the Secure Act and the Secure Act 2.0, which I was part of the legislation and the team helped getting that stuff passed, there's a lot of those things in there that we were aiming to change, even with the 529 plans, which is a college savings account, right? And so yes, you do have the ESA or COVIDAL, but you also have 529 plans, right? And so part of the push was opening up the ability to be able to use those in more ways than what they were currently, well, not currently, what they were previously allowed to do. For example, one of the things that you could do with a 529 plan is if you had a 529 plan, you could change it to a different beneficiary. So if I had two kids, first daughter went to college, she ended up getting a scholarship, she didn't need all that 529 plan money, great. I can move that to my youngest daughter. Well, what happens if my youngest daughter gets a scholarship as well, and now I had all of this money in this education savings account, and I'm going to get taxed if I happen to move it? Well, part of the legislation says, hey, you can take a percentage of it up to a certain amount and you can move it over to a Roth IRA. So that allow people to be able to still take advantage of some tax benefits of using that money without getting that big tax hit if they did not use it for qualified education and savings account. I'm a fan of alternative tools like cash value life insurance for college planning. And part of that is I have a person who is a certified college planning specialist on my team. And one of the things when we look through the data and the numbers, it kind of hurts people to go and use the traditional tools because I can't tell you how many families we've seen say, well, on paper, it seems like I make a lot. So my EFC, my expected family contribution, now known as SAI student aid index, is high. The school is expecting me to be able to contribute all this extra money or take it out of certain accounts. I can't afford to do that. How can I help send my kid to college without the burden? This is the point of dealing with a college planning specialist because they can look at the kind of school, the awards, the likelihood of your child getting into that school. But not only that, we go a little bit deeper and says, well, on the back end, is this school even worth going to because their job placement on the back end? Because most of the time when it's a child choosing the school, they're thinking about, hey, I'm choosing this school because my friends are going there. They're not really thinking fundamentally, is this the best school that's going to give me the best chance of getting a degree once I actually graduate, right? And so we look at the psychology, and there's a lot of data and assessments that the kids can go through to help them kind of plan. So again, going back to that, I don't know what's happening in Texas. I just know you don't necessarily have to only use the ESA. You don't only have to use the 529 plan. You can use multiple of these Because typically with the ESA, you can only put like $2,000 in there a year. That doesn't do a lot when you're trying to plan for somebody's college. 529 plan gives you the ability to put way more aside, but you still have some stipulations on the back end on what's considered qualified education expenses.
I believe, Donna, you were talking not just about saving for college. You were talking about in the public school as opposed to the private school money system set up. And again, I gave my model because I saw years ago where this thing was going. And of course, you got so many uh, things where people are trying to control the curriculum in such a way that you want to have much more flexibility with your curriculum that it can address some of your cultural things. If you're going to just teach that Christopher Columbus discovered America and you don't want no different perspective, that is an issue. If you don't want to teach about King Leopold and you just want to say Hitler was the worst ever, and but you don't want to say that King Leopold and what he did was so bad. I mean that's a problem. So to have a freedom in your curriculum, I think is such a big thing. As a teacher, I'll say that. I turn it over to you, Donna. What you want to say?
Well, I want to clarify some things because I don't want your listeners to be confused, and I think I want to be clear. When we moved from private vouchers for just that reason to say what private schools you want to go to education savings accounts, which have nothing to do with the investment I think that Jeff was talking about, because he mentioned ESAs as well. ESAs, in what I'm referring to, are education savings accounts based on monies that the state is already allocating per kid, and they just put that in an account. It's nothing that the parents are investing in. It's nothing that other than your tax dollars, your property tax dollars, it's nothing that the parents are saying, I'm setting up an account for. It's saying instead of the state deciding your child is enrolled in your zone school, and because that's your zone school and that's where that child is going, then that's where I'm going to send that money.
Yeah.
Right? When
I understand.
Right.
Yeah.
It has nothing to do with 429s and nothing to do with, I believe, what Jeff was saying, the ESAs, which are educational savings account that parents can do. I just want to make that disclaimer there because we're talking about two different things here.
Yeah, thank you for that.
Okay. The third thing I wanted to add was that this is money that parents have the option to utilize based on monies that they would be getting anyway if they were going to public school that's allocated to their children. And it's now saying, the state is not going to hand that money and send it to the individual education agencies like Houston ISD, Aldine ISD, Waller ISD. It's saying now, as a parent, you can choose where you want your child to be educated, and we're going to send the dollars there based on your choice. And what they're saying, Carl, is yes, you're going to be able to make that choice, but it's got to be people that we say, okay. In other words, the schools that are currently the private schools and other entities are now applying now to say that they want to be in the pool to receive those dollars. They could be private schools, they could be home schools, they could be tutoring services, they can be other services. Now these entities are applying to the state of Texas through the comptroller's office to say, hey, I want to be in that pool. So once that money is released in the fall of 2026, those parents that apply and are chosen, they can then go into the state and say where they want to go. But it's not any place they want to go to. And Carl, when you talked about a curriculum and trained, you spoke from a homeschool standpoint, which a lot of people are doing the homeschool because it doesn't require assessment. It doesn't require the oversight. Even charter schools at one time were not requiring the oversight. And of course, private schools were not requiring the oversight. But now
I
that
would
it's
say it's less oversight. It's not no oversight though. You do have
There was
some
there's
oversight.
oversight for charter schools now, but there's no oversight from TEA for private schools, and there's no oversight from TEA for homeschools. However, if a parent does decide to homeschool, they're only going to get $2,000. They will never get the full $10,000 that another general ed student who would go to St. Episcopal, they won't get that dollar. And another thing is that in the state of Texas, they're only going to give $10,800 at the max for any kid who does not have a disability. However, right now in the state of Texas, a kid is supposed to be getting $18,000 per kid. They're saying that if a child with a disability has an IEP, if they have
Individual education plan.
individual education plan or program, then they can get up to $30,000 depending on what that IEP says. Okay. Not only that, if a child does not have an IEP, if they have a medical statement from a doctor stating they have a disability but don't have an IEP or just maybe on 504, they are now eligible to apply for these funds. These funds, the application will not start until February 4th.
Understand.
4th. It will not start to February 4th. So I'm on here today to talk about and share this information for those your listeners who may not be aware of it, because it may not impact you in your house, but it may impact your niece, it may impact your nephew, your grandchild, your grandson, whoever.
We are toward the end of our program. We going a little bit over. However, I want to comment on this. The biggest thing that I get out of this whole situation is more of our parents need to organize. More of our parents. I'm talking about Black parents and minority parents and those who have been disenfranchised. More of us need to organize and build our own, because you talked about private schools. We can have a private school and follow that particular model and get that money also. We can be eligible to organize and get those funds. Not always dependent upon, this public school, that's our only option. What I'm saying is it would be a great time for us to organize, develop our own curriculums, develop our own situations, have our own teachers, and be able to access that money. Because I'm going to tell you, the politics of this is going toward making those funds available for whomever is pushing for them. And of course, that is the white community. That's who is going to be pushing for that money because they are organized and trying to get it. More of us need to be available to push for that. We need to organize, come together in politics, and prepare to have our own school and community environment where we can access those funds. Your last statement on it, Donna.
The last statement is you are right. They are looking for people to mobilize. They are pushing for churches and they are pushing for colleges to really be a part of it. I've attended several education summits at Texas Southern University where the state is coming down with different people in the know to talk about just that. But one criteria they're putting on a call is that now the private schools and any entity that applies to be a vendor or provider to get to access these funds, they must be accredited and they must provide assessments now. So that means they're going to be oversight now with standardized assessments that must be reported to the TEA, and they must be accredited and they must be in two with a minimum of 2 years already in business. So
Oh,
you're right, Paul. This is the time to mobilize. This is the time. So what you're going to see this first $1 billion of monies go out, and it's only going to benefit initially those schools that are already accredited. Okay.
well, I just want to say that, I was a teacher for 32 years, and we have the ability to withstand and overcome any type of thing that they set up. We can pass the test. We can do all of that. Are there different things that are set up just to exclude us? Yes, but together we can work around that. Now, I'm not saying we shouldn't fight against injustice. We should, but we should not just say because it's set up against us, we're not going to try. We're not going to organize. We're not going to do our best to have the best outcome possible. So this is a fight that we need to have for ourselves and for our kids, and go out there and get that money and keep fighting. Do a Jasmine Crockett at all points and go forward. That's what I want to say.
Paul, just for this last comment, for those of you who are interested, we already have that in mind. You just need to go to www.thehublearninggroup.com. We have board members. In fact, one of your major players, I don't know if Philip is on the line today, but he's one of the board members for the Hub Learning Group. And that is our goal, to educate families, the community, and neighbors to develop and to be a part of ensuring that whatever these entities that our parents and our communities apply to, that they're meeting their children's needs, as well as if we have to outsource it or we have to develop it. But that's the hublearninggroup.com is the website. You can go at the website, put your information in to join the calls, to join what we're trying to do, and you'll be hearing more and more and more about us. But Philip Green is one of the board members, so I'm so appreciative that you gave us the opportunity to share tonight.
All right, and please put information about the learning group on a brighter source, a brighter light. That is the companion website to this podcast. A brighter source, a brighter light on Facebook. Let people know about that. About the say the name again.
Me or Jeff?
No, you, Donna. Say the name
of the education group. The hub is the hublearninggroup.com is the website, and our podcast is also the Hub Learning Group on YouTube.
Okay, everybody, the Hub Learning Group, and learn more about it. Contact Donna. Contact me, and I'll get you the information. I'll call Donna and get more information. So the Hub Learning Group, and it's a funding fight that's going on, and we want to be at the top of that and know what's happening. This is the final word. Jeff, give a kind of a final word on the value of understanding how to use money.
I mean, money is a tool, right? At the end of the day, that's what you have to understand, that money is a tool. And so we use it in everyday facets of life, whether that's paying a bill or creating some enjoyment, some type of fun, freedom, and fulfillment. But if you don't learn how to control your money is going to control you, right? And so it's best that you start somewhere, start having a conversation. Find a course that you can buy that's going to give you a blueprint and kind of stick to it, right? So many people just try to piecemeal this stuff together, and they figure like they got to do everything the hard way. No, like you can pay a check, you can cut a check for speed, right? Get to the professional that can actually map out a plan for you and work your plan. Okay. Now, I love AI. I use it probably on a daily basis in some sort of fashion, but AI is not perfect yet. And AI at this point cannot replace your advisor. They can help. They can help you understand maybe your advisor's recommendations, but just know that people like myself are specialists, right? And so we have a specialty in a particular area. AI is only going to be as good as your understanding to prompt it. Okay. If your prompts are weak, you're going to get weak outputs. And if you're prompting it to kind of work in your favor and tell you what you think you should do, it's probably going to do that unless you understand how to design prompts the right way, which is called prompt engineering, right? But the biggest thing is, guys, learn, and reach out to professionals to help you along the way.
And tell people how to contact you.
So one of the best ways to contact me, you can send me a text message. You can call me 501-291-0708. That is 501-291-0708. My email address is jeff@thehillfinancialgroup.com, THEHILL Financial Group. My website is under construction, but I did put a link in the chat. So if you want to put that out there, until we get it moved over to the Hill Financial Group, you can use the link that Baruti can send out to you guys. And I have tons of resources and videos on the website that you guys can kind of go start your learning process.
And Cierra mentioned that she wants to contact you about, some financial things. So she had to leave, and I'll make sure y'all are able to hook up. Donna, you want to make a final statement before we go?
The final statement is it's important that our community, urban communities, are aware of what's going on, what the criteria is, and be aware that this is a deadline on this, and we've got to make this happen and communicate to more of our communities to know that this is existing and it is happening. And so with that said, my information is in the chat for you, and I'm asking that you ask Jeff to put his information that he just gave, the phone number and all that, also in the chat, which would help.
I tell you, I'm going to copy everything. I'm going to make sure I put it on the website, and I'll make sure that it is available for whoever wants it. So we thank you, everybody. This was the 180th episode. We've been doing this a while of the Sourceseeker Hour. I'm Baruti Carl Alexander, and if it's current events going on, if it's stuff happening out in the world, hey, I'm going to try to be right there talking about it. And in the background of my screen, you see my brother Lawrence Allen, who's running for state representative. I'm just giving a shout out. I'll see you next time on the Sourceseeker Hour. We also have other shows. We have a sports show. We have a mental health show. Be aware, and everything out there, be aware and be what's happening. Thank you. We'll see you next time.
Okay, good night. Okay, thanks.
All right. We have stopped it, and I am copying this to put on the website. All right, guys, I'm going to shut down. I'll send you a video.
Okay.
All right.
Go